their
Here,
financial statement.
here we are talking about, there we are talking about financial statements. Here we are talking about profit and loss account. Will definitely what will happen? You will have the parent, is it? You will have the parent and you will have the subsidiary. The same rules will happen. You will have a group structure. What is the share of parent? What is the share of subsidiary? What is the date of acquisition? Is it? What is the date of acquisition? And post acquisition profits, pre acquisition profits. For what here what will happen? We will give whatever the profits will be there from the total profits. We will give the profits to the subsidiary, is it? And whatever the remaining profits belongs to belongs to the parent. Is it? Remaining profit belongs to the parent. That's a simple process which you are going to do. Yeah. We'll club all expenses. We'll club. Sometimes what will happen? There will be sales and there will be purchases. When there is a sales and purchases, the one thing is we will, is it right? We will take there is one concept called as PURP, portion of unrealized profit. Okay, PURP, portion of unrealized profit. Why? What is the concept of portion of unrealized profit? Because if it is, they will say that they have sold goods, but they have sold goods of 100%, but on this 100%, 20% has not, it is not sold. Okay, 20% is still in process. Whichever goods has not been sold, on that goods, on that inventory, we will not calculate the profit. Okay, we will not calculate the profit. Portion of unrealized profit. Is that what we are doing? We are talking about consolidated profit and loss account. We are a simple group dealing with acquisitions. We'll say intergroup trading. We'll calculate any goodwill impairment. We will again same process. Distribute that impairment between parent and subsidiary. Anything fair value adjustments we will add in the other comprehensive income. Is it? In the other comprehensive. What is there? It talks about same thing. Consolidation workings will be there. Is it? You will have any dividends before acquisition, they will pay dividends, they will receive dividends. But once acquisition is over, there is no payment or receive or dividends. Okay, you have intergroup transactions in terms of sales, in terms of interest, in terms of transfer of current assets, and mid-year acquisitions in the middle year if it is going to happen. Is it? That's all. Okay, the consolidated statement of follow three basic principles: revenue down to profit and loss account, all P income expenses plus, okay, plus the S income expenses. Fine. After profit for the year, split the profit between the parent shareholders and those attributable to NCI. After profit for the year, okay, after profit for the year, you have to split the profit between the parent. The mechanics is how we have to say, you have the group structure diagram, what we have done. You have a pro forma statement of profit and loss account, any workings, and you have to take NCI. Is it right? You have to take NCI. Fine. This is the non-controlling interest. profit after tax, we will take anything less, any depreciation, we have to deduct. Portion of unrealized profit, is it? Where subsidiary is a seller, we have to deduct. Any impairment, we have to deduct. Now you will have a very clear structure about how it will work, okay? Now, the only thing is, here is a intergroup. Intergroup means nothing but one company will sell and one company will purchase. If that is the case, from both the things, from sales as well as from the cost of sales, you have to deduct intercompany sales. Is it? Intercompany sales. Fine. Any loan is given, any loans has been given between parent and subsidiary, that must be eliminated. Okay, that must be eliminated. Fine. The same thing. Okay, if there is anything is there, we'll come back to this. In terms of dividends also, the payment made by dividend by yes to parent will need to be removed from the investment income, because previously you will have parent subsidiary relationship. Previously you have the relationship of individual companies. Now after acquisition you will have the relationship of a parent and subsidiary. So there is no point of payment and receipts. Is it? There is no point of payment and receipts. This is the simplest solution. Is it right? See the thing, unrealized profit of investment. This we have to be little bit, we have to focus on this. Okay. See, it is nothing but you are buying, somebody is selling. Is it right? But once you have the acquisition, the concept is going to be totally different as such. It will be total, means you will not have any parent subsidiary relationships. Okay. You will not have any parent subsidiary relationship as such.
Good afternoon.
Yes, Salam Alaikum Hussein.
Salam, how are you?
Fine. Okay. Just now we have started. We are talking in terms of the way it will be, we have to do with respect to parents and subsidiary income statement. Is it? Profit and loss account. How it has to be merged. Fine. Now, they gave you the various things. Is that they are talking about the how the per revenue, cost of sales we have to deduct in terms of parent and subsidiary. Okay, in terms of parent and subsidiary. They gave a small example illustration. We have not done anything for illustration 1 also. See, very simple. Just I will take. Is it right? I will just take the thing. They gave you the revenue. Is it? They will give the cost of sales. You have the trading income in dividend received. Is it right? You have the profit income tax. Now you see the simple format. They have added the revenue. They have added the cost of sales. They have taken the income tax, but they have not taken the dividend income. Is it right? They have not taken the dividend, because dividend income previously it was different entities. Now once you acquired, there is no point of having dividends paid or dividends received. Okay, whatever the profit for the year, from the profit, is it right? From the profit, here what we are saying, from the profit we have to take into consideration the share of subsidiary. Okay, this is what we have to be little bit careful when we are working on that. From where we got this 40%, is it? From where we got this 40%. See, 40% it is this one. Is it? This is the 40. People, what students will do, students will straight away take this profit and they will divide. No, we should not take that. Whatever the profit that has been reflected here in the subsidiary, in this subsidiary profit, you have to distribute this profit under 40%, whatever the profit sharing ratio. Is it? This is little bit more. This is the only critical one which you have to be focused. Okay, only critical one. Other things are more or less, it is more easy. That is the things that happen. See, is it right? They are talking about the cost of sales. Now what they are doing, they are talking about the, see, they will say six, they are, I will explain you this and we will do the problem. That will be more easy for us. Is it right? They say that when they have, during the year, they have sold some goods. These goods are sold for 84,000, cost is 56,000. Out of this, still some goods has been not sold. Whatever the goods that has been not sold, for that goods there will be a portion of unrealized profit. Okay, portion of unrealized profit. That much we have to do. Okay, that much we have. See the thing. They have here what they have done. They have removed the purchase, and from the purchases they have removed the amount of the transaction with respect to sales and purchases, and this is what they have done with respect to working to talks about unrealized profit. Okay, unrealized profit, we have to work it out on the unrealized profit. Fine. Apart from that, other things are normal. Okay, other things are normal. Now we will take this one. Okay, we will take this one and we'll focus on this. It says that, see, set out are the draft statements of funds and subsidiary for the year ended. This is the reporting date. On January 1st, is it right? They have purchased. See the thing. The first one is your group structure. Is it right? Hussein, yesterday you are not there, but again I am going to explain you this. Even in the balance sheet or in the income statement, the first working is going to be group structure. Is it right? This is with respect to Pawns and this is with respect to Sultanas. Okay? How much they have purchased? They have purchased 75,000. Okay? 75,000 of 100% means 75% belongs to Pawns and 25% belongs to the subsidiary. Okay, when they have purchased on 1st January 2006. Okay, this is the first thing you have to do with respect to group structure. During the year, the Sultanate has sold goods how much? 20,000. Is it right? Making a markup of 1/3. They have a markup of 1/3. 1/3. Okay. They have a markup of 1/3. 1/3%. 1/3. Okay. Only 20% of those goods was sold. Before me, 80% has not been sold. Okay. We will whatever the goods not sold, on that we will calculate unrealized profit. Goodwill has been subject to impairment. Okay, there is how much impairment? 5,000. Okay, 5,000. At the date of acquisition, fair value adjustment made, and they have to make an additional depreciation charges for the current year, 50,000. Okay, now Punnens values the NCI. See, we have two methods. Is it right? Fair. They are doing as per what? They are doing as per the fair value. Okay. The first one is group structure. The second one, go by the adjustments. What they have mentioned, they are talking in terms of goods sold. Is it right? Goods sold. Unrealized profit. Portion of unrealized profit. Is that? I will write like this. Portion of unrealized profit. Is it? When the portion of unrealized profit, how much is there? How much goods has been sold? Goods sold worth of how much? 20,000.
20 per.
Okay.
Yeah.
Goods sold is how much? They have sold goods worth of how much? 20,000. Is it? Goods Sold is how much? 20,000. This on this unsold is how much? Unsold is 80%. Is it 20,000 times 80%? It comes to how much? It comes to 16,000. Is it? It comes to how much? 16,000. 16,000. They say markup. Okay, they say markup. 1/3 means 100. What is how much? Markup 1/3 means if the cost is 100, markup will be how much? Markup will be 33 1/3. Is it right? Is it? Means what will be the sale price? Sale price will be 133.13. Markup, is it at 100 plus? 100 plus, it comes to how much? It comes to 133. Is it? This is very important. 133 1/3. Markup means 1/3 they are marking up. Means whatever the cost it is happening. How much is there? If you take into consideration what is the profit? Profit will be 16,000 unrealized profit. Okay? Here unrealized profit. Unrealized profit is 16 into 33 1/3 divided by 133 1/3, or you can write like this also, 16,000 1/4. Okay, 33 1/3% means 25% profit. If it is, they say 25 1/4 markup is means 20% profit. This you will understand by experience. Okay, but don't go for shortcuts right now. How much is the unrealized profit? Unrealized profit is 4,000. Is it? Unrealized profit is how much? 4,000. Are you clear about this? Little bit you have to be focused. First example, it will just you understand. Second example, it will be easy for us to work it out. Next, what you have to do? The working 3. Working 3 is respect to what? With respect to NCI. What is the NCI? Is it right? How much is the profit of NCI? Profit for the year. Profit of subsidiary is how much? NCI is subsidiary. Okay, NCI means subsidiary. Okay, by default, other name for accounting name, if you ask me, accounting name for a subsidiary is NCI. Is that what is the NCI profit? Profit for the year. They say profit for the year is how much? Profit for the year is 80. Is it right? Minus. Is it right? Minus unrealized profit. Portion of unrealized profit. Working 2. Is it? Working 2. How much? 4,000. This is in thousands. Okay, this is in thousands. Portion of. Next, they say in one of the cases, in point number 2, how much is the impairment?
Yeah, 5,000.
5,000. Okay, is that this all belongs to whom? This is all belongs to the subsidiary. Is it right? Impairment. How much is the impairment? 5,000. Now, apart from impairment, there is the depreciation is also there. Is that fair value additional depreciation? Is that impairment? Point number 2. Okay, point number 2. You have a depreciation, fair value. Is that depreciation, fair value? Point number 3. Okay, point number 3. How much is the depreciation? 15. How much you will get? 80 minus 4 minus 5, 20, 24. 24. 80 minus 24, 56. Is it right? In this 56, you are not going to take anything, okay? You don't say 75-25. We take only NCI share at the rate of 25%. Only NCI share. 25% means 1 by 4 means 28. 28 minus divided by 2. It comes to how much? It comes to 14,000. It comes to how much? It comes to, now you understanding, we have to take profit for the year 80,000, portion of unrealized profit 4,000, impairment 5,000, depreciation 15. You will get. Is that only we have to take the share of the subsidiary. That's all. We are not going to do anything else. That much only we are doing. We have taken point number 1. We have done point number 2. We have done point number 3. Okay, fair value. Now consolidated statement of profit and loss. Is it a profit and loss? Nothing is there. You will say it is really a piece of cake for you. I am telling you this. For the year ended 31st December 2007. Okay. We are not doing anything. Is it right? See the thing. We put particulars amount. Now revenue. Is it right? Revenue. Parent is how much? 600 plus 300. Is it right? 600 plus 300. How much is there? 600 plus 300 is how much? Okay, fine. Now, what we have to do, there is a unsold goods. Unsold goods is how much? During the sold, they have sold how much? They have sold how much? 20,000. This you have to remove, 20,000. We will remove 20,000 from the sales. We will remove 20,000 from the purchases also. Okay? 20,000. 900 minus 20, it comes to how much? 880. It comes to put thousands. Okay, put thousands. Fine. Next. What you have? You have a cost of sales. Is it cost of sales? Is it? I will put like this. Is it? I will write here P. I will write here subsidiary. I will write here point number 1. Okay. Now it is how much? 360. 360 plus 140. Minus 20. Is it? Minus 20. Fine. How much you will get? How much you will get? 360 minus 140. 560. Is it right? How much? 480. Is it right? 480.
360 plus 140 minus 20. Yeah,
Okay.
480.
To this, what we have to add? We have to take into consideration the unrealized profit. Unrealized profit we have to deduct. Okay, unrealized profit we have to deduct. Fine. How much is the unrealized profit? Unrealized portion of unrealized profit. First we have to make VAT, then we have to deduct. This comes from where? This comes from working to. Is that portion?
The cost of sale 360 plus 140 and 20 again we have to minus
yes,
the profit.
Yes, we have to deduct it from the sales as well as we have to deduct it from the purchases.
Okay. Yeah.
Okay, we have to deduct it from the sales as well as we have to deduct it from the purchase. Same amount. Okay, portion of unrealized profit. I am writing this. Working to, how much is there? 4. These are all expenses. Is it right? Next. You have the depreciation also. How much you have calculated depreciation? Depreciation is 15. Okay. Now you have to deduct this amount. Okay. You have to deduct this amount. Is it right? How much is there?
480 minus 4 minus 15. 461.
480
minus 4 minus
480, no, 1 minute, 360
yeah.
plus 140 minus 20 minus 20, 480, 480 plus 4 plus 50, 480 plus 4,
Now it-
480 plus 4 plus 15, how much dear?
499.
499.
Okay, we have to add the total and minus the. Okay, understood. Yeah, yeah.
Okay. Okay, how much you'll get? 117 minus 8, 3. This is gross profit. Is it? This is gross profit. Now, what we have to take? Operating expenses. Okay, operating expenses. Operating expenses. How much is the operating expenses? 93 for parent company, 45 for the
45.
subsidiary company. Is it 45 for the subsidiary? Is it right? Now we have taken the portion of unrealized profit. We have how much you'll get. First you take that one. How much you'll get? You will get how much? 93 plus 45,
138.
138. In this we have to add impairment. How much is there impairment of goodwill?
Impairment is 5.
Impairment is how much? Impairment is 5.
5.
How much is there? 143.
143.
Okay, 143. How much? 381. 381 minus 143. How much? 238. Is it? This is called as profit from operations. Okay, next, finance cost. Okay, finance cost. Finance cost is how much? Only 3. There is nothing for parent company, only subsidiary company. Is it right? I will write 0 plus 3. How much is there? 3. 235. This is profit before tax. Okay, next, income tax. F7, this financial reporting group accounts, the most easiest one. The most easiest one, 50 plus 32. Is that 50 plus 32? How much? It is 82. 3, 13, 5, 153. This is profit for the year. Is it right? Profit for the. Now what we have to do? How much is the profit of the subsidiary? 80. Okay. How much is the profit of the subsidiary? We have calculated. Somewhere we have calculated here. Is that we have calculated here. NCI share is how much? NCI share is 14. Is it right? NCI share is how much? Working 3. Okay, working 3. Okay, working 3. Now you have to write very clear. Attributable. Is it attributable to parent or parent? Okay, parent. Okay, attributable to parent. How much is the subsidiary? You cannot write that like that, but you have to working 3. How much It is 14. Okay. Now parent is how much? 153 minus 14. Okay, 153 minus 14. It comes to how much? 139. This is little, don't worry about that. This once we do, second time we'll do, automatically we will learn about this.
This is 153 plus 14. From where?
Minus 14,
Yeah. From where?
working 3.
Working 3.
It is there?
150. Working 3. Okay, 14, yes. 153. And the question given?
No, not question. This we have got from here.
Okay. Okay.
Okay, this we got from
Minus
here.
14.
Okay, this we got from
Okay.
here. We see profit for the year is 153. Now 153 we have to separate it.
Hmm.
Is that we have to separate it.
Yeah. We have to take the profit for that 14.
Yes.
Yeah.
Okay.
Subsidiary. Okay. All right. Okay.
That much only. Nothing is there. This is the simplest of the simplest way of doing the question. Is there? I think we have 2 or 3 questions maximum. That is more, not more than that. Okay. Fine. Are you clear about this?
Yes, Dr. Clear.
Hussein, how are you, sir?
Saying
Good,
is
good,
good.
good.
Doing well.
Okay. Next. Now,
How are we doing this?
now you can do on your own. You can do on your own. Paris paid 1.5 million for 80%. Okay, 80% of London's 80,000 shares. Is that group working 1? Is it working 1 group structure? Whether you are doing the profit and loss account or you are doing the statement of financial statement position, we have to do the group structure. Is it right? Paris,
Yeah.
Paris and London. Okay, Paris and London. How much is there? It is 80%, it is 20%. When they have acquired it, they have acquired it on 31st
December.
31st
First
December
December
2001.
2001.
Yeah, 31st December 2000. Fine. Now, this is over,
Yeah.
okay? Now, our second one is what? Second one is, I will write here only, okay? Working 2. Second one is NCI. What is the profit? 400. It is there? It is there? Subsidiary profit is how much? Subsidiary profit is how much? If they will give you the profit for the year is how much?
Doctor, why we didn't take that PURP?
PURP, PURP, PURP.
Why we didn't take in the
There is anything
working
is there,
too?
sales is there. Paris made sales to London, a 600,000. Not all the goods has been stored externally by the year end. The profit element included in the inventory is how much? Already they have calculated profit element. How much their profit element is how much? 30,000. Or this is
If
PURP.
they,
This is PURP.
okay, if they calculated, so we don't need to
Why
do
we
any
have to do it?
calculation
They
directly.
gave us that.
Yeah.
Is it? They have said, okay? Is it okay?
Okay. Yeah.
Is it? How much is the profit of the subsidiary? Profit of the subsidiary is 400. Okay, how much is PURP?
30.
The profit element included in the London's closing inventory. We will take that when we are doing. Is it right? What we have done previously? What we have done previously? We have done previously. Why we have deducted PURP. Is it right? We have deducted PURP. But what they are saying here, it has been included in closing inventory. Okay, the profit element included in the closing inventory. When we do the cost of sales, then we will see that. Okay, then we will see that because they have said that it has been included. It has been included in the London's closing inventory. Okay, we will see that. Now,
Yeah.
goodwill. How much is the goodwill impairment?
40,000.
40,000 minus impairment. Minus impairment goodwill. Is that 40? This is in thousands. Okay. This is in 1040. Next. Anything else? Anything else?
Check. Depreciation.
Yes. How much is the depreciation?
10.
Fair
10,000.
value depreciation. How much? 10.
10,000.
How much it gets? It comes to 350. Is it? NCI share is how much? NCI share is 20% only. How much 20%? How much 20% of 350? How much?
10%, 70.
70. Okay, 300 of 20% is 70. That's all. Okay, we have taken the share, we have taken the goodwill, we have taken the, we will take this letter, we have taken the depreciation. We will not take the dividends. Okay, we should not take the dividends. Okay, we should not. They will give, but we should not take. And they said that they're using the fair value method. Okay, they are using the fair value. Now, that's all. Okay, consolidated.
Yeah.
Consolidated profit and loss of Paris for the year ended 31st December 2005. Again I am saying, whenever you are putting the leave this week, just inform me. We will have class morning time. Is that if you are
Revision, no?
yes, I will do as much as possible. I will do as much as possible this week only. Next week you are having exam, I will leave for you. Okay, this will, even if we are going to take 2 classes per day, nothing will. It is good for us. Listen my word. My experience says, is it when we are doing together, you will learn a lot. We will do new things. Revenue. How much is the revenue? Slowly and steadily do. Okay, same process. Okay, how much is the? They have a selling price. Intercompany is there. How much is the revenue? 3,200, 2,560. How much is there? 5,760. Check. Minus intercompany sales. How much is the intercompany sales? 600. This is in thousands. Okay, intercompany. From where we got intercompany sales? Point number 2. Point number 3. Okay, point 3. Okay, how much will be 5,160. Okay, next, cost of sales. Here little bit careful. When I am saying little bit careful means little bit careful. 2,200 plus 1,480. Do everything separately. Okay, do everything separately. 2,200 plus 1,480. It comes to how much? 3,680. Okay, from here, see, it is all, see, is it right? There are something plus, there are something minus. Minus intercompany sales. Intercompany sales. How much? 600. Okay, intercompany sales. 3,080. Is it 3,080? Now you have to take all the, see, you have to deduct from sales. Okay, but you have to add to the cost of sales plus portion of unrealized profit. Is it portion of unrealized profit? Point number 3. Is it point number 3? How much is there? 30. Okay, add. Okay, how much is there? Add. Next, you have depreciation. Okay, you have depreciation. How much is the depreciation fair value? How much is the depreciation? 10. Is that how much is the depreciation? 10. Now you have to deduct. Okay, first you have to add. See, first you have to deduct intercompany sales. You have to add proportion of unrealized profit. Depreciation. How much will get? 3,090, 410, 4010, 4020. Check. No, it's not 440. 1 minute. It is not 40, sorry. 3080 plus 30 plus 10. How much? 3120. Check. Are you clear about this cost of sales? What happened?